Alright, in this tutorial video, we intend to introduce you to two of the most powerful indicators in technical analysis, namely stop and reverse, or SAR, and average directional indicator. In this section, I type the term SAR in the filter area. Type this, select the second option, SAR, public stop and reverse. Confirm to view SAR on the stocks chart. See SAR circles on the chart. Note that the SARs, when they are above the stocks price chart and cross it from top to bottom, immediately fall below the stocks price chart. Buy when SARs are above, sell when below. But the point is that the SARs give you many buy and sell signals. However, we cannot use and trust all of these buy and sell signals. We can use some of these signals when another oscillator called ADX confirms it for us. So for SAR signals, I need another oscillator called the average directional index, or ADX. Now to call up the ADX, we go to the window in the report tab and add the indicator. In this section, we type the term ADX down here. When you type it, from the list that appears, select the second option, which is SAR, parabolic step and reverse. You will encounter a series of settings on the right which you don't need to adjust. And by clicking OK, you activate the SAR. You will see it on the price chart. If I zoom in a bit on the chart, you will notice a series of small hollow circles appearing above or below the price chart in different areas. These hollow circles are the SAR or SAR. They are the parabolic step and reverse. Note that SAR, when they are above a price chart, they indicate that the price is going up and down that day and immediately fall below the price chart. At that moment, you have a buy signal, and for a sell signal, when the SAR is below the price chart, and when they move from below to above the chart and immediately fall above the chart, you will have a sell signal. But the main point here is that they give you numerous buy and sell signals, various options. However, we cannot use and trust all these buy and sell signals that we receive from various sources. We can only use some of these signals when another oscillator, which is called the ADX, confirms it for us with its own analysis. So, for the RSI signals to be valid, I need another oscillator, specifically the ADX, to confirm them. Now, to simply call the ADX, we go to the window in the report tab, and then add an indicator window, and we can just type the term ADX right down here, as you can see. You type the term ADX, and you can see the ADX, or average directional index, here. In this section, we won't change the settings there, but notice below that when you call up the ADX, you have one ADX line and two other lines called the positive and negative DIs, which create this ADX for us. However, we don't need the two positive and negative DI lines. We only need the ADX. To do this, you need to remove the positive and negative DI lines, similar to the DFF and DEA lines in the MAS-CD oscillator, or change them to the color of your display background. By doing this, you have only called up the ADX. And another important point is that when in the areas of the stock price chart, I can trust my SARs that my IDI is above the level of 20. Now in some, in fact, analytical books and boxes, they consider the IDI 40. It depends on your level of risk tolerance and risk aversion. But the normal situation is to set my IDI to 20. Before I make these settings, I press the confirm button once and call up the IDI, and we see together that in this case, I see a series of intertwined lines that I can't get any good signals from. One of these lines is the IDI, and the other two are positive and negative DI that should be removed from the line from the background of my analysis. And I also see the stock price chart that is not in a very good position, and I can't make a decision about it very easily. So for this, it is better for you to click on one of these lines once again and enter the IDX settings window and delete the positive and negative DI in this area. First, we can change the positive and negative DI to the background color of our analysis so that these two lines are deleted, and then you can change the IDX to a desired color. For example, I will change it to yellow and increase its thickness a little. I will set its thickness to 3, and on the other hand, you should also give the IDX a limit of 20. To do this, all of these settings that we are making here are in the Output tab. Just click the side tab, which is Error Horizontal Lines, and give this indicator a value of 20. And here we can also give it a desired color, for example, the color green. For example, we can give it a thickness and set the line type to either a solid line or a dashed line. Well, when I did this and pressed the confirm button, you can see exactly this yellow chart. That is, DX is your number, and this dashed line is the same as line 20. The dashed line 20 that you have in mind. Now for this task, you can mark the areas where your X, D, is above the line 20 as the approved areas of S, I. Yes, put it. In other words, in this area, from this point to this point, I cannot X, DX. If SIR has given me a signal, I approve its signal. Or in these areas, we cannot actually signal X, DX, the signals of SI. Yes, I approve of what is above. But from these areas, the signals that SIR gives me, meaning from this area, you can show the areas with a horizontal line. Or if your risk tolerance is higher and you cannot accept a lot of risk, you can enter the settings window again and set the value to 40 instead of 20 here. And this line, none, comes up higher, and then the area of the signals that are actually given to me becomes smaller. For example, in this area, see, in this area I can trust the signals of SI. Yes, I trust you very much. Now, in order to enlarge my chart and see this analysis better, I just need to go and actually check the signal area that SIR has provided for me. Now you can see that in this area, this exit signal is strongly confirmed by I. DX is down here, so I can trust it and use this signal. Now let's set it to the normal state of 20. Actually, our settings, okay, see now, from this area, I can increase the thickness of this line a bit and change its color. Set it to 4, and this line as well. And the beginning of it from the area where EDX is above the line 20 to other areas that have not yet gone below the line 20. In all these areas, I can pay attention to the signals of SA. I'll actually pay attention. Well, look guys, in this area we have exactly a buy signal, a sell signal, various signals that exist, and the amount of profit you could have taken from the stock. But for example, in this area, I will turn this into red in this area. Exactly from this area to here. Well, I drag this area to make it larger. Look here where ADX is below the 20 line. If I want to pay attention to its signal, it's better not to consider being this signal. Now that signal might be a good signal. For example, here it might be a good signal to enter, but ADX does not confirm the signal, and it's better for me not to do it. Now let's look at the end of the chart together. Let's go to the end of the chart. Look guys, you know, I'm at the end of the chart, like I am in this area. And it has a series of signals one after another. In fact, the software is giving them to me. Here, I can't get S signals from this area to this area. I I don't trust it, but from this area onwards, the signals are S. Arm signals are reliable, and I actually need to consider this. For the end of the chart, I can also trust the next S. Yes, I trust you because UDX is above the 20 line. Therefore, now in this area, if something is going to happen on the stock price chart, it has actually come up from below and landed on the upper part of the chart, the upper area of the stock chart. You see, in the past, the analyses we conducted, when the chart moved from bottom to top, we had a sell signal. So here is a sell signal, meaning it shows that I still shouldn't take action to buy this stock according to the area. That is located in this upper part, and I should wait for this bars that have formed above the chart gradually come down and fall below the chart so that I have a buy signal. And I must be careful with that buy signal. Down here to the S, to ED, I should watch X, so ADX fall below the line of 20, because if it falls below the line of 20, then that signal will no longer be acceptable to me. Well, these are the signals related to the S, R and ADX, which are very, very attractive and very important, and you should pay attention to them in your analyses on the stock price chart. In the next videos, we will actually see one of the most important technical analyses, namely the Fibonacci sequence on the stock price chart. And don't overlook the attractiveness of that analysis. Be sure to watch the next video